My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, really excited to speak with today's special guest, Danielle Crawford, who is zooming in from our nation's capital, Ottawa, Ontario. And the reason I'm excited to chat with Danielle is because her journey in real estate investing I find fascinating. She started off doing joint ventures on the money side of the equation. Then she moved into being the active partner. And these days, she's getting into wholesaling multifamily properties. So Danielle, welcome to the call. Great to have you here.
Hi, Dave. Thank you very much. Very excited to be a guest on this podcast because I've definitely listened as a viewer, so it's really cool to be in the hot seat for once. Yeah.
Well, it's our honor to have you here, and hopefully we won't make the seat too hot.
Yeah, we'll see. We'll see how that goes.
All right. So, hey, tell us a little bit about your backstory. What got you piqued and curious about real estate in the first place?
So, as you mentioned, I'm born and raised in Ottawa, Ontario. I am 31 years old, and I work right now full-time for the government at the Department of National Defense.
Mm-hmm.
And what got me
so we got to be extra nice to you because you get access to the weapons. Gotcha. Got
exactly.
it. All right.
Yeah, I know the guys with the guns.
Yeah, be extra nice.
Mm-hmm. Yeah, for sure. And it was interesting because I would never truly meant to get into real estate. It was never something I intentionally sought out at the time. Before I started my career in the government, I actually used to go backpacking. So I finished university and I would work one or two jobs for 6 months, and then I'd leave to go travel the world. I went on trips by myself. I went on trips with friends, but I
did that too for 2.5 years.
Did you? That's amazing.
Wait, before you were born.
Well,
but anyhow,
I think that travel is, I think, this universal thing, right? It's so appealing to everyone. It's accessible in different ways. And for me, I worked full time in university, paid for it in cash. And then when I finished, I was really looking to go out and experience the world. I didn't have any debt. A lot of my friends had to start working right away. I wanted to get some experience, live life, be young. And so I did that. And it was this amazing experience. It really taught me a lot. Obviously, between university and this, taught me a lot about managing my own finances and saving money. Mm-hmm. And when that came to an end and I started my career job, I still had that habit of knowing how to save, but I didn't know how to grow my money or make my money work harder for me. Right. That wasn't really a concept that I was taught growing up. My parents are very responsible people, very risk averse. They manage their money, how they do it. But they weren't the people who were oh, this is how you're going to go out and invest. This is how you get into stocks, So right. At 28, 29 years old, I was starting to or 28, I think I was starting to figure that out for myself because I finally had a little bit of cash, didn't know what to do with it. And then COVID hit. So
you got to go home. You got to work from home for quite a while.
Yeah. I did. I started working from home, and my boyfriend, now fiance, and I were living downtown in a 1-bedroom apartment. Yeah. We were going to kill each other. So we were we have to look for a bigger spot. And he threw out the idea at the time of buying a house. And at that point, I was I wasn't set in my career. He was still sort of up and coming in his. Mm-hmm. And that really freaked me out. I was I don't know anything about home ownership. What if we want to go travel again? Yeah. But it sort of just got that mental note of how can I make that happen, even if it's not something we're doing right now.
Got it.
So, we moved, we started renting again, and I just started to get really curious about money. And first it started with looking into stock options and how that works, index investing. Then it started into TFSA and RSPs and how do I make that work? And I started to listen to podcasts. That was my foray into the financial literacy world, really.
Right.
And I heard someone talking about just money management, and she a really impressive female investor who she just seemed to really understand how money worked. Nice. She wasn't super heavy into one or the other, I felt at the time. And so I reached out for help. And I thought she was going to tell me like, put your money into TFSA and this is how you invest it. And when we really got talking about my goals and the access to capital that I had in my savings, she introduced this concept of real estate.
Okay.
And yeah, and at the time, like I really, I had just said I don't want to be a homeowner. We had just moved, signed a lease.
Yeah.
And then she's like, but you could do this. And the opportunity that she introduced me to was being a passive investor on a rental investment.
Okay.
And it was something that we could afford to do, not in Ottawa.
Mhm.
So she started to explain that like you don't have to invest where you live. You can like rent where you live and then buy somewhere else, and you can own something that will put money in your pocket. Rent own had the 3 year timeline, which we thought would work for us in terms
Mhm.
of buying our own house one day. And then we didn't keep my fiance didn't want to be a landlord. That was like,
Perfect. Yeah.
yeah.
So passive
So
investing sounded good. Yeah. So where
exactly.
was
And so
so maybe run us through just kind of the big picture overview of the deal.
yeah.
Where you guys are in Ottawa, where was the property that you ended up investing in?
So we bought it. It's in Sudbury and Valcaron.
Hmm.
And she introduced us to a company there that sets up and structures the deal. They vet the tenant buyers. We got to pick them, like, they introduced them to us, just
Yeah.
their profile, and we get to ask questions. And then we sort of picked who the right people were for us.
Hmm.
They went out and picked the property. We purchased it.
Yeah,
And then,
I actually did that for a number of years. The tenant first, rent own model. Yeah,
yeah,
very nice, nice.
it was. And it was
And so the
amazing.
company manages the whole thing. You guys don't have to worry about anything. It just
Yeah.
they
Yeah,
babysit the tenant,
totally.
they collect the rents, all that good stuff. Perfect.
Yeah,
Yeah, good.
they check in on it. And for us, that was an amazing thing. And what it did for us was really show us that one, this is an accessible way for us to grow our income. And two, didn't know that you could ever buy real estate as a partnership, like
Mhm.
as an active or passive partner.
Yeah,
So it sort of like was this aha moment, like we could do this.
yeah.
And for me, that deal started, say, like in May of 2021. And then by the time it closed in September, I knew that I didn't want to be the passive partner anymore. I was like, I was reading I was listening to all the podcasts, I was
I
reading
want to
all
be
the
in the
books.
driver's seat. Yeah, I get it. I get it.
Yeah. And I saw the power of it. And I realized that for me, somebody who's very proud to do the work I do, like I work for the military,
Mhm.
I help them get funding for military projects. And so that's like $1 billion budgets and stuff that we're working on to make sure that our military has what they need to do, their
Mhm.
jobs, and keep us
I think
safe.
they just got their budget cut by $1 billion or something crazy like that. So
Yeah.
anyhow,
Oh,
that's a
yeah.
different topic. But anyhow, so you
Totally
got your
different
work,
topic.
you got your work cut out for you. Got it.
100%. But what it did, like, I've never been somebody who wanted to like work until I'm 65, or like work 35 years at a desk job. When I was
Yeah.
backpacking, I saw people working remote and like living alternatively.
Yeah.
So it was a very weird like 180 to go into this career job where you're very set,
Very
safe,
structured,
secured.
especially government. Yeah, for sure. And the
Yeah,
people that you work with that are just plugged right into that whole lifestyle. I hear you. I hear you,
exactly.
Danielle.
And so to
So,
me,
you
real
got
estate was this
started.
tool.
Yeah, you got started passively. So tell me about the active side of things. What did you jump into as your first active deal?
So as soon as that deal closed, within a couple of months, I had joined the coaching program. I ended up buying a duplex. So I closed on a property September 2021, bought a duplex with JV partners who raised
Nice.
100% of the capital by December 2021,
Hmm.
and then bought a fourplex and closed on that in April 2022.
Congratulations. That is
Thank
fantastic.
you.
So are they close to Ottawa or are they at a distance as well?
So the two that I'm the active partners on are an hour and a half from where I live.
Mhm.
So it's in Pembroke, Ontario. It's close to a military base. It's got a college, university stuff there. So
Yeah.
it worked out. But I knew if I was going to be the active partner, I wanted to be close by, like more hands on. I really like to get involved with what I'm doing. I'm very
Mhm.
passionate about what I do. And
Yeah.
also, too, I take a lot of pride and I have a lot of integrity about my partnerships. And these people have trusted me with their like retirement money, with their finance.
Mhm.
Like this is what they have access to. This is their capital. I take that as a very big responsibility. So
Mhm.
I wanted to be somewhere where I can grow a team, but also if I need to go and address an issue, I can be there. So that worked out for me, like navigate just pivoting to a market that was closer to home.
No, that makes a lot of sense. So let's unwrap that a little bit more, Danielle, because I always find that fascinating, especially doing your first deal with joint venture partners. And you said they
Mhm.
financed 100% of that. Is that correct?
They did.
Yes. So sometimes those joint venture partners are called mom and dad. I'm not sure if you've got family members involved or these are other people. And the question would be, how did you get them engaged without having a track record already? I'm always curious about
Yeah.
that. Yeah,
Yeah. And I will be very honest. So none of my investment partners are my family.
good.
Or yeah, some of
Yep.
them, one of them is a friend of mine that I met through work. Her
Mhm.
and her husband had already owned their house and used to house hack. So they were renting out a room, like
Yep.
rooms in it to cover their rent. They started having kids. They believed in real estate already, knew the
Too
power
busy.
of it, too busy.
Got
And
it.
then my second partner, actually, same thing. It was She's actually a CPA, so she's an accountant, and they'd owned a rental before. They had one when we started working together,
Mhm.
and they were having their second baby. So again,
Too busy.
all this knowledge, all the ability, totally bought into the idea of real estate. Too busy. And I think for people who are starting out as newbies and looking to raise capital, picking a partner like a JV, we call them like the joint venture avatar, right? Like your
Yeah.
profile. I think it's much easier to approach people who already buy into the concept of owning property and building wealth that way. They
Okay. So let's back up a little bit. Did you
mhm,
already, was this a duplex or the fourplex was your first one that you did?
duplex.
Duplex. So let's take a look at that one.
Yeah.
So you got this, you found the duplex. Did you have it under contract and then go looking for the money, or had you already been talking with your avatars ahead of time?
So I had been talking with those partners a little bit already.
Mark.
What I had been doing and what I was mentored through at the time was, start sharing what you're doing on social media,
Mm-hmm.
build a brand. And so I was doing that. I was really honest about like what I was doing and working hard and what I was learning.
Yeah.
Also very honest about what I didn't know. And to me, that was important about like leveraging the experience of somebody else. I grew up playing competitive sports. I always had a coach. I want to invest with other people's money. I think having a mentor and paying for that to get their expertise where I'm weak
Very
was
smart.
a really important thing to do. And it did add credibility, and it became more comfortable for my partners to know that I was accountable to somebody with more experience was looking at these deals and helping to troubleshoot some of those problems.
Mm-hmm.
So that was a big thing. And then what happened was my social media platform, like just showing up and being, authentic on there and sharing what I was doing, attracted people to me.
Mm-hmm.
And from that, we started having those conversations. So I didn't necessarily like raise it through complete social media. I took those partners to the
Good,
duplex. We
because
went
you
for
got to be really
dinner.
careful with Ontario securities doing that kind of stuff.
Yes.
So you got to be very, very
And
cognizant of that. Yeah.
And I'm so glad you mentioned that because I think that as a newbie, when I was watching all these people who are like, buy all these houses, no money down, do this,
Mm-hmm.
like, no, like all JV partners all the way, OPM. Nobody ever talked about securities law or the risks of like sharing certain details online or what you're responsible to. So that was a learning curve and something I'm more mindful of now that I'm a
Mm-hmm.
bit more seasoned. And I've like sort of stacked my community with people who are on the other side of wealth, which was a big thing for me during the market downturn as well. Was just, I was like, I've never gone through this before. I don't have this coach anymore.
Right.
Like, I want to be around people who can help advise me and put me in the right direction and who we work together well with.
Yeah.
But
So, okay, so let's look at that deal. So that's great. So you've been documenting your journey on social media for a while. You'd been
mhm,
part of different communities and talking with people and kind of the soft approach.
yeah.
Then this opportunity lands on your lap or you find it. I'm not sure how you came across it, but you got the duplex. So how would you, without going into too much detail, because we don't have that much time, but how were you
Yeah.
able to close on that property and bring the investors on board and line it all up in a timely fashion?
So that one the property was vacant, so that was easier. We didn't have tenants to contend with. It'd been
Nice.
sitting on the market for a little while. I was using a realtor and going on market for that deal.
Mhm.
So I did have the time to like get in right away and do the inspection. I was raising the capital. My investors were interested. I presented it to them. We
Mhm.
met and they cared a lot more sort of about the soft details than the house itself.
Yeah,
And I think that was because they already bought into the concept. It was more like, how are you going to handle
exactly.
problems?
Because they're
What are
investing
you
in you.
responsible for?
They're investing in you. The property is just the collateral for that investment.
Exactly. And so just being really upfront and clear, we obviously had a very solid joint venture agreement outlining the roles and responsibilities of the active partner, who is me, and the passive partner for them. And
Mhm.
then everything after that, we just handle as a team. Like
Yeah.
I obviously shoulder the the day-to-day responsibility and management, But if there's a point where we have to make decisions, like we're on a variable rate, our mortgage has
Mhm.
gone up, we are still cash flowing on all our properties, which is phenomenal. But we have had those conversations of like, where's our red line on that?
Yeah.
We check in when we have to, and then otherwise, I like to share good news as well, not just bad news. So I
I
think
hope
that's a good
so.
practice.
Yeah, for
Yeah, well,
sure.
I find some people only talk to their partners if they're like, oh, we have a problem, and
Yeah,
I'm
we
like,
got
oh,
cash
hey, like
call
we
time. Yeah.
yeah, and so I like to be like, hey, the tenant just said this like really great thing about us. You should know that,
Awesome.
or they're really happy. So, and my other philosophy for all my partnerships is I never bring a problem to my joint venture partners. My job is to shoulder that burden. So if we have to make a decision together, I will find the solutions and present them to them, and we
Mhm.
can go through like which one I recommend or what we both want. And then, but other than that, like I take the brunt of that for them.
No, that makes sense. So Danielle, you're now kind of looking at different opportunities as we wrap up our conversation. Tell me a little bit about multifamily wholesaling. What does that mean? What does that look like? What's that all about?
So what I through like working on my past deals, I got connected with Matthew Frederick, who I know you know,
I do. Yeah.
actually. And we are now working together as business partners. And he's been doing real estate, obviously, for like 40 years at a very, very high level. And I knew by the end of like my third deal that I was just like, this is a lot of work. Even if you have other people putting capital into your deals, you're still responsible to like have reserve funds in case you have to put money into a property. I think there's this myth that like no money down deals at the start are always a no money down deal. Your partners are not an infinite banking system for you.
Right. Right.
So we did hit challenges with our buildings,
Yep.
which required me to put in money. So, and frankly, I was just like, I have 7 units across 3 properties and managing these partnerships. I was like, if I want to keep going, I don't want to have 200 joint venture partners and 200 units.
Hmm.
And so when I got connected with Matthew, he was teaching me one about going bigger sooner. So like looking at larger spaces, like, the 10 plus units, 12 plus units, they work harder. It's one furnace instead of having like 10 buildings to manage. So a little bit easier. And then the concept too of like, you don't have to own everything to be productive in real estate. So wholesaling sort of solves a problem I have where I would like to have my own capital to do some of my own deals.
Hmm.
We have our own investment goals. I also want to have them just to continue scaling and having access to reserve fund. I
Yep.
think it's an excellent skill to have to bring to the table because it brings any opportunity that comes across your desk. If it's a good one and you can assign it, great return on time. And the multifamily space, especially in the economic times we're in now, is like more investor friendly. You've got several people paying one mortgage. If you've got a vacant unit or a non-paying tenant, which is a very big risk, especially in Ontario, less impact to your bottom line at the end of the day,
Hmm.
more control over like how you can force appreciation on that asset by
No, there's
controlling
lots
the
of
income.
advantages to multifamily for sure. So curiosity,
Yeah.
Danielle, what are you, Matthew, finding working best these days for finding these kind of deals? You're finding them off market, I would assume. Is that correct?
Yeah, Matthew
Yeah.
specializes in finding deals off market and then really convincing building owners who are not thinking of selling to sell.
Nice.
So that's what we've been working on. And,
Excellent.
we were underwriting a 14 unit or a 14 building portfolio in Moncton. We're speaking with property owners and we've got some people who want to they want to sell us their building to do a land development project with us.
Okay.
Because that's
Yeah.
Matthew's skill set as well. Like he's built
Mhm.
subdivisions. So it's sometimes showing people like we're connecting with them, we're reaching out, we're doing the grunt work to really like get those numbers. And then showing them that there's another side of real estate that some people think they're done. Some people, same thing, they've owned all these buildings, they've never had someone approach them to be a partner. So now they might want to invest with us. So
Right.
it's just been a very different investing philosophy. But that was sort of the transition into wholesaling like multifamily buildings.
Very cool. Oh, that ties in beautifully. Awesome,
Yeah.
Danielle. Well, this is fascinating. Congratulations on your rapid progression in the real estate investing world from
Thank you
knowing
very much.
nothing at the beginning of COVID and not wanting to own your own home or anything like that, not being tied down to having three revenue properties and now getting involved in wholesaling multifamilies. That's fantastic. So, Danielle, if somebody wants to connect with you, what's the best way for them to do that?
They can find me on Instagram. It's at Homegirl Invests because for me it all started with home. So at Homegirl Invests, and then we also have at High Ground Dash Invests, which is mine and Matthew's business. You can reach out to me on either platform. I will respond. I am always excited to connect with people, especially whether they're interested in getting into real estate or looking for buildings to buy. If you're a buyer looking for large multifamily, reach out to us. We have deals coming through the pipeline and we would love to, help solve a problem for somebody else.
Awesome. All right, Danielle, take care. Thanks for being on the show.
Thanks so much.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.